Dividends from Apple pay 24 cents per quarter, which is about 96 cents per year. Southwest Airlines, they pay 72 cents per share per year. But you can buy almost 8 shares of Love for the price of 1 share of Apple. So with the $1,000, you now have either Apple's $5 per year or Southwest $28 per year. It makes Southwest the obvious better choice as an investment, right? Hey, what's up 9 to 5 wealth builders? It's Darius from Wealth is My Worth, your go-to spot for navigating the world of money, investing, and career growth. Everybody loves to talk about passive income, right? Well, today we're jumping right into that topic. And we're not just going to talk about building wealth, but how you can build wealth by kicking your feet up and sitting back and watching the money do the work for you. That's right. Today we're going to talk about dividends, the only true investment that will generate real passive income. So you've probably heard of dividends before, but what exactly are they? Dividends are simply profit splits. You can think of them as your investments that are having babies. So dividends are like little baby paychecks with your name on them. So just by owning the stock, you get paid every single year and you don't have to sell the stock to get paid. It's just like extra money. When you own stock in a company, many of them will pay dividends to shareholders. And notice I say many because not all of them do. Like for instance, the tech giants Apple and Microsoft, they both pay dividends. But their counterparts Google and Facebook, well, they don't. When the generous companies that do pay investors dividends, this is how it works. They'll take a portion of the profits that they've earned that year and they'll split it fairly between all the different shareholders according to the percentage of the company that they own. So basically, if I own just one of the millions of available shares of, let's just say, Chevron, I am part owner of that company. And as owner and shareholder of that company, I am entitled to some portion or some percentage of all the billions of dollars of profits that they've earned that year. Some common questions that new investors ask are, how much do dividends pay? Or how much should my portfolio be making me in dividend income? Or even, how can I make a bunch of money by investing in stocks that pay dividends? Well, the majority of dividends pay a super small amount per share. And I'm talking about like less than $1 per year. Like for instance, Apple, they pay just 24 cents per share per quarter. So that means if you own 100 shares of Apple, which is a lot by the way, that means you'll get a check every 3 months for $24. While dividend payouts start off small, they compound over time, especially as you start to reinvest those payouts into buying more shares. One great example of this is the Decade Investor, a fellow YouTuber but is mostly active on Twitter daily. His goal is to build an annual dividend income of $120,000 per year. Talk about big goals. In his latest update, he actually shared that he's already 7% of the way there. And get this, he even built an app called Purple Brick which tracks your dividend investments over time down to the day. How dope is that? Well, that's cool for him and all, but you might be wondering, how does this work for the average Joe investor like us? What can we expect from our portfolios? The average investor can have a portfolio that returns about 6% in dividend income alone. So let's just use a $100,000 portfolio as an example, because that's a good big goal that we should all strive for when we first get started. So with the $100,000 invested and a 6% yield, you can expect to earn about $6,000 per year, which is about $500 per month in dividend investments alone. And remember, this is in addition to the profits that you make from your equity and your investments growing in value over the years. So to make a bunch of money in dividends like the Decade Investor, you could obviously just buy a hell of a lot more shares of stocks. The obvious and easy route is always going to be the most expensive. But if you're like me and you don't have that kind of money laying around, you could also optimize your portfolio strategically for dividend income. If you increase your yield percentage, you'll also increase your overall income. Now that's thinking smarter, not harder. And so let's illustrate this. We just showed how dividends from Apple pay 24 cents per quarter, which is about 96 cents per year. Alternatively, Southwest Airlines, they pay 72 cents per share per year. Now this is still less than 96 cents per year, which Apple offers, but you can buy almost 8 shares of Love for the price of 1 share of Apple. Let's paint this picture even more. If you take $1,000 and you invest it into Apple, you get 5 shares, each paying you almost $1 per year, making your $1,000 investment return $5 per year in dividend income. Or with that same $1,000, you can invest in Southwest Airlines. This will give you 40 shares, which will pay you about 72 cents per year. This will give you a dividend income of $28 per year. So with the $1,000, you now have either Apple's $5 per year or Southwest $28 per year. So when we compare the dividend payouts, it makes Southwest the obvious better choice as an investment, right? Not quite. Now let me explain why. Sorry to interrupt, but I hope you like this video so far. If so, go ahead and hit that like button and subscribe to Wealth is My Worth so you don't miss any of the future videos about investing. And if you don't want to wait, you can download my ebook for free that'll teach you exactly how you can get started investing today. Now let's go back into the video so I can tell you why I have far more money invested in Apple than I do in Southwest. Before we get overly ambitious about dividends, you're going to want to understand that dividends are just the icing on the cake. And you wouldn't buy a nasty cake just because it had your favorite icing, would you? So what's the actual cake part of the cake? That's the price of the stock that raises and drops over time. So we still need to have solid investment fundamentals before we care anything about how much a dividend would pay. If you lose money on your initial investment, can you really justify it with the little old money that you're making from dividends? Probably not. That would be just like putting the icing on top of a cake that's still wet and fell right through the middle. Not only would it be ugly, but it probably wouldn't taste so good either. Remember, investing is about buying low and letting it grow. We could also say buy low and sell high, but we're long-term buy and hold investors and not day traders. So if we plan to own a stock for a long time, we want to feel very confident that we'll see an increase in value over that time. I name dropped and shared some info on some of my favorite stocks like Chevron, Apple, Microsoft, Southwest, and I'll give you one more, and this is the one that I recommend over all of them. And that is VTI, which is Vanguard's index fund. And yes, it pays dividends. I'm adding this one because if you follow Wealth is My Worth at all, you know that I preach index funds and ETFs over everything. And yes, I practice what I preach because this is how I invest over 80% of the income that I invest today. As always, thank you for hanging out with me today. And if you found this video valuable, give it a thumbs up and subscribe to Wealth is My Worth now if you want to learn more about investing. And lastly, always remember, you are worthy of wealth.